Part of the goal for our network is to provide the tools for economic success in our community. We hope to accomplish that through this video, at least start to provide that through this video by giving you a little bit of basic information about the stock market and how to get started investing.
So, welcome to Black Vision Network. We're your hosts, Janae.
And I'm Theo.
And on our channel, we seek to empower the Black community by giving tips to help give knowledge and empowerment in key areas such as counseling, business, healthcare, and education. I hope everyone learned something new from this video. So without further ado, let's get into this video.
So before we dive into kind of the basics of the stock market, as I said at the beginning, let's kind of frame what our goal is in talking about this subject in the first place. So one of the goals that we want to see accomplished is giving the keys for economic success in the Black community. So where information and access was previously systematically taken away, we want to cure those ills and provide access and information to those who've been disenfranchised in this realm.
Let's take a look at the numbers by first taking a look at the power of the Black dollar. There are trillions of dollars in the U.S. market, and Black people are part of the reason why there is so much money in circulation. And as we can see in the ethnic hair and beauty aids, that's all the wig wearing, weave, hair, deep conditioning, wash day regimen stuff. Women, Black women and men make up almost 86% of the money being circulated. And then as we keep looking down, we see that we have about 20% to 15% of everything else that's important, such as toiletries and food. And I thought it was really funny that included on this list was spices, seasonings, and extracts. And we add about 16% of the money in circulation. So this is billions of dollars being circulated by our Black community, but yet it's not being circulated within our community. Compared to other communities, we only are about, it's incomparable. Asian communities keep it for a month, white communities keep it for about 17 days, but we only keep it for 6 hours. And what that translates into is a humongous wealth gap. As you can see here, Black people have the least amount of wealth, generational wealth and income throughout the last 20 years. And because we want to change that, we know that the key to changing that and to maintaining and attaining wealth is through knowledge.
And so we want to give underserved communities the ability to gain economic independence and capital. We hope to be able to start to achieve that through investing. And investing is so important because if you look at the richest people in the world today, nobody got there without investing. They'll most likely tell you.
From this chart, we can see that millionaires allocate the largest percent of their income to equities, or another word for this is stocks. The second biggest category is cash, which is probably what they use to spend on their everyday living expenses. Next, we have fixed income, which is just another term for bonds. If you want to know more about bonds, leave it in the comments. Next, we have real estate and alternative investments.
It's key to growing your money, making your money work without really working. And you need some form of investment or passive income in order to grow to the levels of the people that you see, the millionaires and billionaires that you see in the world today.
So there's billions and trillions of dollars within the stock market and trillions of dollars within the foreign exchange market. And once you get some of the basic concepts that we're going to introduce to beginners, or if anybody has never heard of the stock market before, this video is for you. And we wanted to give you some of the basic things that you should know before you dive into investing in the stock market. And I really suggest anybody who has dreams of actually having money, or who wants to have money right now in the future, they should invest in the stock market or the foreign exchange market. There's so much opportunity there, and more opportunity there is, the more there are people who are knowledgeable about the opportunity, and the more knowledgeable you are, the more you can take advantage of the opportunity. And so we're here to bring you more knowledge so you can take advantage of the trillions of dollars out there and get your little piece of it.
Absolutely. And so why does that matter in terms of helping advance the Black community? Because in today's society, money talks. When you look at the great systematic changes, the monumental legislation that has been passed and monumental change that has happened in this country, it came as a result of affecting what really moves America, and that's money. When you look at the bus boycotts and how impactful that was into starting to get civil rights legislation passed, it was because of the economic pain that our civil disobedience caused.
On December 1st, 1955, Rosa Parks was asked by a bus driver to get out of her seat and stand for a white man to take her seat. 4 days later, on December 5th, 1955, the Montgomery Bus boycotts began. These boycotts lasted for 381 days, finally ending in 1956, resulting in a Supreme Court ruling that restricted bus access was unconstitutional. This was the first major movement for civil rights. Out of this movement emerged major leaders such as Martin Luther King.
When you look at things like the massacre on Black Wall Street, they fear our unity in this area, especially because this is something that moves the needle.
Black Wall Street was an area located in Tulsa, Oklahoma. It started in 1906 when a wealthy African American from Arkansas purchased over 40 acres of land, and he only sold it to other African Americans. He wanted to help out with those moving from Mississippi and seeking refuge from oppression. During Wall Street's heyday, they had over 600 businesses and its own school system. They had one bank, one hospital, 2 movie theaters, 30 grocery stores, 21 restaurants, and 21 churches. Their economy was so well in tune that their dollar circulated 36 to 100 times in a year before leaving. This was a result of forced segregation because black people were not able to do business in white businesses. Therefore, this forced them to rely on themselves and create their own economy that flourished. In fact, they flourished so well that the average income for a family during its heyday was higher than minimum wage is right now. As a result of Black prosperity in a country that was dominated by white capitalism, many people around the Oklahoma area were upset, and they began the massacre of Black Wall Street. There are many different accounts on what happened this night in 1921, but from what we have collected, white people were mad that Black people were doing well.
So we want to put the money in our community. And so in order to put money in our community, we need money. We believe here on Black Vision Network in group economics, lifting up the community from the inside, keeping the Black dollar in the Black community, fostering the creation of need-based businesses within the Black community so that we can fund our own schools. We don't need to rely on what's going to happen when they shut down our schools, and give funding to areas that are underserved and that have been things that are supposed to be held up by the government and federal funding that haven't been. We can fund those things ourselves. And so one of the ways to do that is the stock market. And so let's start off by first saying why the stock market works as an investment vehicle.
Now that you know that you're going to go into the stock market, these are the things you need to do before you actually put your money in there so you can be an intelligent investor rather than a speculator. And so one of the things about the stock market is that it goes in pattern and it trends. And it repeats itself throughout history. And so Theo's going to dive a little bit deeper into the patterns that he noticed and that are more common in the stock market.
Absolutely. So the market, one of the reasons that, especially in our community, in the Black community, we have seen people stray away from the market is because of the fear of loss. And the first thing to know about the stock market is, like Janae said, it's a cyclical market. The market is looking to find its equilibrium, but if you look at, and we'll put up a graph here, since the inception of the market is always trending upwards. Now, that doesn't mean that there won't be times where there are crashes or corrections in the market, but since its inception, the market has always increased and will always rebound from a loss that it takes. We even seen that in the unprecedented that we're currently still experiencing due to COVID. Is that I had plenty of people who were talking to me is like, oh, this is, a crash like we never seen before. This is worse than the 2008 dot-com bubble. This is worse than the 1920 depression. This is a new game. And what happened? The market rebounded, of course. So the first thing to know is that you want to put your money in the market, because if you're putting it anywhere else, you're technically losing your money. And so that is your savings, typical savings or checking accounts. You're getting less. Typically it's like 0.001% APY, annual percentage yield on your money that you're saving in those accounts, which is less than the rate of inflation. And so I believe the average of return on the market is at least 8%. And so that's the number one reason. You can just put your money in, and we'll kind of do this in the next step, but a stock that follows the gains of the market and be doing better than the rate of inflation, knowing that your money is growing and working on its own.
And one of the ways to be a smarter investor is to do research on specific stocks and actually go do research on the ones that actually interest you, because the more they interest you, the more chance you are to go into deeper research and learn more about them, so you have a deeper knowledge before you invest money into that stock. And so next, Theo is going to go over some of the things you can look for in a specific stock that kind of are flags that it's either good or bad.
Absolutely. So I'm going to toss out some terms and then kind of give my explanation of what those terms are. Just very, very basic level. Another thing that has intimidated our community from investing is that people make it seem like this is rocket science. It's not rocket science. Very simple things, very simple charts that you can look at when you know what to look for, and you can find success. It's really about controlling your emotions that people lose. People lose because they sell too early or don't sell at the right time, usually.
And additionally, most investors give up learning within the first couple years of them starting investing, and the most successful investors continue learning throughout their whole entire investing careers. And by you being here today and looking at this video, whether you heard about the stock market before or not, is you investing in yourself and in your knowledge. And if you continue learning, I guarantee you will be successful.
Absolutely. So some of the things that I've been recommended from people that I trust, kind of a basic kind of checklist to go through, is you want to look at a company's price to earnings ratio, which is the market value per share divided by the earnings per share. And earnings per share is also important in itself. That's what, by owning a share of that stock, what the based on the valuation of that company, what that share will give to you in earnings. And so these things are important because it shows what a company expects to do in terms of growth compared to others in its industry. And this is very important when trying to mitigate risk or trying to go for a long shot. For example, when you see kind of a large PE ratio or forecasted earnings per share, that means that this company is forecasting a lot of growth in their sector. You'll see this kind of with chips and semiconductors. One big company that has been taking off recently is NVIDIA. They had a huge forward PE. They were forecasting a lot of earnings potential in the future, and by them having that, they were a very risky stock. They were rated a risky stock, but those risky stocks is also where you see the most gains. And
but further information, you did more research that made you more invested in the stock? Well, you had more trust in it because you had trust in 5G, the 5G wave. Absolutely. And you knew that 5G was going to be coming in. That's part of the future. And just knowing that, you have more faith that the forward PE ratio will be higher because you have that knowledge additionally. So it's like a wholesome thing when you look at the numbers and then you look at the news and just like take in as many sources of information as you can.
Absolutely. And so there are some other indicators beyond those two. I also like to look at the moving average. Like I said, the market, it likes to move towards equilibrium. The moving average, based on the indicators that you set, kind of tell you, it smooths out the data for you. And so it gives you a price average of where the price is going. And so I typically want to buy a stock below its moving average because, you know, a stock can go way above or way below what's the moving average. But like I said, the market is always trying to go towards equilibrium, which would be the fair price that stock is valued for. And so you want to make sure that you're buying below that, because if you're buying above that, you're kind of taking a risk in potential loss, I feel like, because you're saying that you're willing to pay more than what's the fair valuation of the company. And you always want to, you know, buy low and sell high. So anything that gives me a better chance to accomplish that, I'm looking for it. And so if I can get something at a discount, a good stock at a discount, that's kind of what the moving average can help you do and justifying your head.
For those of you that don't know what a moving average is, it basically takes what price was over the past, there's an average, and you know, it's a function of time. So if a price of a stock has been steadily increasing over time for the past 10 years, the slope is probably upwards of the moving average. So basically he's saying that price moves up and down above the moving average. We'll insert a chart, but to basically explain what it is, but the moving average is what the price is supposed to be if you averaged it over some of the cycles, just so you know.
Yes. And so after the moving average, like Janae mentioned, kind of with, I was willing to bet on a risky stock because I knew some other things. Another thing that you want to look into is company health. And a lot of different things can tell you about a company's health. You know, how much debt a company is taking on. You know, are they paying their bills? Are they posting a positive earnings per share? You know, who is the leadership of the company? Do you believe in the leadership? For example, Elon Musk of Tesla. You know, I believe in Elon Musk. I'm willing to invest in Tesla and SpaceX when it finally comes out on the market, because I know what Elon Musk has done for Tesla. You know, they continually said, do not buy this stock, do not buy this stock. And continually Tesla has smashed record after record after record in increase. And he is showing great leadership with that company. And so you want to pay attention to those things. You know, what is it that the company does? What is the competitive advantage that company has over others in its marketplace? For example, Apple, they said the same thing about Apple, that Apple was out of here, but Apple is still the market leader in what it does. You know, the iPhone, iPad, iMacs, they're not going anywhere anytime soon. You know, everybody's worried about their sales with all the competing factors, but they've shown again here in the year that we're in a pandemic that they're gonna find a way to be profitable and be a leader in their market. You know, so you want to pay attention to those type of things. Make sure you're buying into something that you understand and you know that they hold a differentiator in the market, something that sets them apart, because that matters into your decision making as far as how long you're going to hold on to the stock. Is this a short play? Is this a long play? You know, usually most times you want to play for those long plays. Typically, you know, those are safer and you're less likely to lose money. Once you're invested after 10 years in a stock, you basically see a lot less loss than if you were to get out of a stock before that 10 years. So basically, all that to say that the longer that you invest, the less likely it is that you'll see loss in what you invested in. And so you want to make sure that you're investing in quality companies that are going to be here for the future.
And as a last note before we head out of here, Theo kind of touched on it, but investing in the stock market is a long-term investment if you want to reap maximum reward. And for those of you that are saying like, oh, I don't even have $5 to invest right now. If you have $1, that is enough. Just start investing. You're sacrificing, pleasures for now to have even more reward and pleasures in the future. And so just become more aware of what's out there so that you can actually manifest what you actually are desiring. And one of the best ways to manifest money is to start investing in things that are going to make money for you. And one of the best things to do that with is the stock market.
Absolutely. And so before you get started, we don't want to tell you to do anything without, of course, first doing the research, but also take some, personal inventory. Learn yourself, learn what your tolerance is for risk, because like I said, one of the biggest ways that you lose money in the stock market is through emotion. So getting in there and saying, oh my God, I just lost $5. I have to sell everything immediately. If that's the type of person that you are, then you want to make sure that you're really investing in something super, super safe where you're not going to see any risk, because when you take that money out prematurely, you're cementing your losses. So do some personal accounting, know what you can first put into the stock market safely and comfortably, and then do some personal accounting to know what is your risk tolerance and how to move forward best so that you can see the maximum reward from your investing.
All right, guys, so I hope you learned a lot from this video. I hope it was helpful. I hope you start investing in the stock market if you haven't, because we're all going to be millionaires one day. And without further, I'm tired of saying without further ado. If you haven't already, go ahead and like and subscribe to this video. Comment something. If we thought we missed something, comment down below.
And in those comments, don't be afraid to let us know what you think of our videos, what you would like to hear from us next, and anything that you think of, because we want to serve the people. So the more that we hear from the people, the better we can serve you. So that's it.
All right, guys. Bye.